Mortgage renewals are coming up fast and furious, and a bit of a sticker shock to say the least for a lot of clients, going from maybe a low 2% range rate and seeing the rates that are coming in their mail or in their email inbox with typically a 5 or even a 6 in front of that rate. So today's session, we really just want to focus on what are some of the best ways to really maximize your savings when it comes to your upcoming maturity. There may be some temporary pain in regards to the interest rates, but there's certainly some really good tips here that we're going to touch on how to just maximize those savings and really take advantage of this renewal season that we're coming into. Before I pass it off to the gents here, a lot of people have a mortgage coming up for renewal this year. It was a lot of 3-year and 5-year terms are coming up for maturity this year, and in fact, it's actually one of the highest amount of mortgages coming up for renewal in the history of Canadian mortgages. So this is a great topic to get into. There is a lot of good things we're going to touch on. So yeah, I'll pass it off to the gents. We got Derek here and Tyler here today. So yeah, really looking forward to getting into this and tossing this one around.
Yeah, really hot topic. Actually, we've definitely noticed internally that every single client that we've worked with that's coming up for renewal, we've found a solution for them that's typically been better than what their current institution's been offering. And I think it's, a lot of people, well, first of all, people don't come up for renewal that often, believe it or not. A lot of people refinance within the term, they've sold, they bought a new property. So if you're actually nearing the end of a mortgage term, good on you, because it's rare. But the strategy side of it, right? Like a lot of people don't understand the importance of the strategy and the conversation and reviewing options. I think a lot of people just think, I'm with XYZ bank, they're offering me, XYZ rates, and I need to pick one of those going forward. So there's a lot of detail that needs to go into that plan before you sign up with your bank. And, at the end of the day, your current bank might be the best option, but a second opinion is required, in my opinion. So yeah, I'll just kind of start there, and I'll let Tyler dig into this as well. But I know we wanted to start off on timelines. I think that's a really key piece here is, number one, just the awareness. So again, people don't usually keep track of maturity dates, and sometimes the banks forget to keep track, and they actually forget to reach out to you and offer you a renewal. So being aware of your maturity date and then being aware of timelines of when you should be looking into options. Super key piece here. So I'll let Tyler jump in on that.
Sure. I think in terms of timeline, like you can never really be too early, right? Like whether you think 6 months out, 12 months, 18, maybe even 24, because a lot of things can change in your life that might change your options when it comes up to renewal season, right? How often do we see helping borrowers, even on the purchase side, renewal side, refinance side, where we check their credit and, something's happened within their life and it could be AAA credit the whole way and make one mistake, one slip up. But because we're so far, we're planning so far ahead, we can actually make some changes and we can jump credit scores sometimes 10, 15, 20, 30, 40, 50 points by implementing a few strategies. So in terms of, when should you start the process? I really believe you're never too early, right? Because putting the steps and plans together, even if it's a do nothing plan, like it's only going to benefit you when it comes time to actually sign up. And for the banks, that they're never offering that advice piece, right? Like their retention teams and their plan is really, let's chuck a rate at them, hope they sign it. Most people's mindset, most borrowers' mindset is okay, this is my bank, I'm kind of stuck with them, I got to take what they offer. And from a pure business side at the bank, like there's really no incentive for them to kind of show their cards and give you their best offer right out of the gate, right? They're always going to start high, because I think the stats show on their end, most people end up just signing to stay on board. And really, if you're ahead of the game, you're thinking about timeline, you're planning early, you talk to maybe a broker, you're generally going to get yourself a better deal.
That's a good point. I think the easy button is always to just sign that renewal agreement, or flip that email back that you're staying on board and signing for the whatever term they gave you. And so for sure, those stats are definitely in their favor in that regard. And again, it is the easy button. Like the easy path is to just take the renewal. That literally the only effort is you putting ink to paper and taking what they offered you. And, the preparation and the planning is where there is a little bit more work involved. Let's say, I always like to try to budget things from a timing perspective. And like, if you're going to actually put some time into this and plan, yes, you're going to have to requalify to move the mortgage and actually explore other options. And that could mean, maybe a half an hour to an hour of work updating your documentation and, a bit of information when it comes to your application. So, if you really want to quantify this in, dollars per hour, some of the savings that we're seeing on average, we're seeing it at a minimum, $5,000 to $10,000 at a minimum of savings from just shopping. And quite frankly, it's actually quite a bit higher than that. So, if I think the hesitation for a lot of people is that, well, it's just so easy, I can just sign and I'm done. Versus, oh, I got to get these documents together. I got to, update my application. I might have to spend an hour to 2 hours doing this. Well, if you could save, upwards of $10,000 or more from 2 hours of work, I don't think you'll find too many Canadians in Canada that are earning $5,000 per hour for a bit of effort. So it's a good way to just kind of quantify, a little bit of extra effort to save some pretty significant dollars. So I highly recommend putting that time in. I don't think you'll ever get any negative from that other than missing maybe an hour to 2 hours out of your day. So I highly recommend that. And it really comes down to just preparation, really. And to Tyler's point, like it's never really too early because you don't really know what kind of maybe mistakes or errors you might have made along the way since you got your mortgage. Not understanding that a couple missed payments on the credit card or a couple high balances on your credit card could be potentially bringing your score down. And then to Tyler's point, just the couple tips that you can do to really rebound that. Or one of the big ones I'm seeing is clients going from an employed position to a self-employed position and maybe not having the history that they're going to require to actually get qualified. And if we put a plan in place ahead of time, like let's say 24 months out from renewal, wouldn't be too early to actually have a conversation and look at ways to really plan for that finish line of the maturity date.
Yeah, really good points from each of you guys. I mean, one thing that comes to mind just listening to Dean talk, I mean, people look at a mortgage renewal like it's work, it's like it's gonna be a bit of a nightmare to deal with. Like you need to look at that like an opportunity. Right? Because until you come up for renewal, you do not have the opportunity to change your mortgage, to switch to a different lender. And this is all at no cost, right? Like you're a free agent. You can go wherever you want. You can pick a different product. You can pull money out of your house if you qualify. You can extend your amortization. Like you can totally restructure your property to set yourself up for success going forward. And if you're doing that midterm, there's a penalty to do so. Like you need to look at this like a positive. And to me, it's just pure laziness if someone doesn't want to do a 15-minute application and send in 6 to 8 documents, right? There's a lot of value in this. So I think it really want to drive that home that it's even just a quick 15-minute conversation can probably give a pretty good gauge on like if you're going to have options, if it's worth pursuing the application and putting that extra bit of work in. So just start with the conversation, reach out to us obviously if you have questions, and back to timelines. Like if you have a renewal coming up in 2 years and you're just curious where you stand, give us a call, right? Like it's just, we'll have the conversation. We'll kind of figure out the lay of the land right now. Worst case scenario, we go through the process and everything looks great and you don't need to do anything right now, but at least you're in good shape for the renewal when you get a little bit closer.
So one thing before we move off of timelines is, we're talking about it's never really too early to look at this. It's also, well, it could be too late if you go past your maturity date, of course, but even in that case, it might not be too late. One thing I get quite frequently, and as recent as today, I have a client reaching out, mentioning that their renewal's coming up in just 6 days, and they're worried that they have no options. There is nothing they can do. So depending on your current lender, you actually do have time, even when you're right at the finish line, or even if you just went past maturity and you forgot about it. Depending on the lender, most lenders do roll into an open term. So if you don't actually make a decision on what they're offering you, you are likely in an open term. The negative to that is your interest rate is significantly higher when you're in an open term. But the positive is it gives you time to actually continue to shop and make a prudent decision and then move move forward to, say, a different lender without having to pay a penalty because you're in an open term. And if you're with a lender that potentially rolls you into a 6-month close term, because there are some banks and lenders out there that if you don't respond to them or make a decision, you go past maturity, you will roll into a 6-month close term. And those are difficult because now you're really strapped to only working with that lender for those 6 months. You'll have to wait the 6 months without paying a penalty. So let's say you're maybe a couple days out from maturity and you are with a lender that will roll you into a closed term. You can call them and tell them that you are shopping, you are speaking to a mortgage broker or what have you, and you need them to roll you into an open term until you make your decision. Every lender will grant you that opportunity if you communicate to them prior to maturity. So even if you're a day away and you make that communication, it gives you that time to continue to shop. So don't stress if your maturity is right around the corner. That is a tip. That's probably one of the best tips you can take away from this to just buy yourself some time.
Yeah, I was just going to follow that up and sort of kind of combine it with what Derek was talking about. And also, for the listeners, keep in mind, these renewal options we're talking about, this is for, our AAA banks and even a lot of our B lenders. If you're talking about a private mortgage, it's a totally different kettle of fish that maybe we'll touch on a different podcast episode, because those are much different than what we're talking about. Major bank lenders, credit unions, anything that's, that and see like a real traditional lender. These are the institutions we're talking about. And then I was just going to talk about, in terms of timeline, and I agree with what Derek's saying about, not doing the work. I think a lot of people, especially if they're coming off a purchase, like we're coming from the Lower Mainland, Vancouver, we're buying a home. Even if you've got excellent mortgage help, can be very stressful. The mortgage process is, you've got subject removal dates, you've got deposits, you've got so many things going on that it can be a very daunting task. A renewal is a much, much less stressful process to go through, especially if you give yourself enough time. You hire the right mortgage professional to work for you. It's basically quite often, and if you're going back to the same people, we complete an easy application, we gather your documentation, and then you wait to hear from us. And then we do all the legwork up front, we shop, and especially if we're well in advance, we can really really get into the weeds and find the perfect product for you and really take the whole stress out of it, versus all of a sudden looking at your renewal date and it's in 30 days and you maybe didn't give yourself enough time. And maybe to Dean's point, sure, you can roll into an open, but how much extra is that going to cost you because you're going to pay a high rate because you didn't do the work up front? But yeah, a completely different process than going through a purchase, just in terms of timeline and kind of stress points and what can go wrong. Generally speaking, if you give yourself enough time, you can kind of lay the groundwork to set yourself up for success. When we're talking about renewal rates and everything that the banks are offering, like the other thing you got to keep in mind is just market conditions, right? So we've seen interest rates move up quite dramatically over the last 12 months. Like the banks aren't dummies. They know that. So that's why we're seeing, and we're not naming any names, and frankly, why we're winning quite a bit of renewal business, because the banks are offering, frankly, garbage interest rates because they're under the assumption that a lot of people can't move because the stress test has moved up when interest rates have moved up. And so, they're not dummies, right? So they're really trying to play that angle and just kind of offer you something, terrible right out of the gate, which is all the more reason to get in touch with the right mortgage professional.
I mean, that's a good point, and it's a good segue into, what will your current lender do at renewal? And typically you're going to see, just that, what Tyler mentioned there. You're going to get, not an advantageous rate whatsoever offered to you up front. And you should see those offers come about 90 days prior to your maturity date. That's typically when a lender will reach out. Some lenders are actually being a bit more proactive in reaching out even earlier than that, where some lenders are getting a little bit lackadaisical and actually not getting in touch with you until maybe even 30 days prior to renewal. So it does depend on the bank or lender you're working with, but the average timeline that you would or should receive an offer is that 90-day mark. And if you haven't received an offer or any communication within 90 days, I would definitely be reaching out to them and finding out why and understanding where they're at from a perspective of what they're going to offer you. So maybe we could just quickly touch on that piece alone, like, what is happening at this point in time. We've kind of gone through the process on what we would do to shop and prepare, but what should a client expect from their lender other than just, waiting to hear from them?
Yeah, I mean, I'll touch on that, and just tying into our process as well. Like we always want to make sure that the client gets the best possible outcome, even if it isn't with us. So every single person that we talk to that's like, yeah, I'm coming up for renewal, I want a second opinion. If they don't have their offer from their bank, we tell them to go get it. Like typically, like if we won't even present options and go super in depth until we know what their bank is offering, because once in a while you do get a one-off situation. The bank is trying to be competitive and save the mortgage, and if we don't have a better option, we will actually support our client in getting a better rate from their own bank, just in a bit of a shopping strategic conversation that you can have with your own institution. So that's a big piece. You want to make sure you know what your bank's offering, right, as you work through this process. I will say that every bank's different, right? There isn't a blanket statement on like what they do or how they do it or when they send their options or if there's strategy or not. But I will say a general blanket statement that typically it's a renewal offer that's going to be mailed or emailed. A lot of times there isn't even a phone call, right? It's like, here's what we're willing to offer. We're not asking any questions about your situation. We have no clue. There's no talk about rates or products or the current market. And they expect you to pick it up and sign and select whatever you think is best for yourself. And unfortunately, if you're not entrenched in the industry and the real estate world and the mortgage markets, you might not know what the best option is for yourself. And that's why you need advice going into this. That said, we brought up a couple of these pieces already. Like if you haven't heard from your bank, you need to reach out to them to find out what they're offering. The rate piece it's a huge flaw. Like it really is. I mean, we just helped a client of ours with an alternative lender, and he got a renewal rate offered to him at 7.5%. We got it down to 6.8 with the same lender. So that just goes to show, right? Like all we had to do was get in touch and do some negotiating, and they actually dropped the rate by 0.7%. Like why wasn't that offered to the client from the get-go, right? So at the end of the day, that was a situation that made sense for him to stay there for qualification reasons, which was actually my next piece. Big question, like what if you don't actually qualify to leave your current institution? Because it happens, right? Maybe someone got their mortgage when rates were really low. Maybe they were working a full-time job and they've retired since. So like there are going to be situations where you don't actually qualify to go to a new lender. Reason for that, you have to fully qualify if you're changing institutions. Or if you're borrowing an additional dollar of mortgage money, it's a full-on qualification, right? If you are just renewing your base mortgage on the same amortization, no changes at all, there's no qualification for that. So in those situations, if you can't leave your bank, unless it's a very important piece, if there's dramatic savings, you can look at co-signers, you can look at different options to try to make it work. But if you simply don't qualify, then your best bet is negotiating with your current bank to try to get the rate as low as possible. Just making sure you really understand your options.
Yeah. Just on that, like, if you don't qualify, it's nothing to be alarmed of. You will be offered a renewal from your current lender, assuming you didn't miss a payment. If you didn't miss any payments during your term, it's pretty much an automatic renewal option. So you always have that in your back pocket to just stay with your lender and stay the course. So I mean that's pretty good from a perspective of covering kind of like what to expect from your lender in the process at maturity. So why don't we just touch on a few options at renewal, because this is certainly not going to be discussed with from a perspective of your bank coming to you. Like to Tyler's point earlier in the episode, like you are just really going to receive a letter and that's about it. But there are options to consider at renewal, and the reason why you'd want to consider some of these options that we're going to touch on is this is the opportunity. Like, we're talking about leaving your bank and going and get a better rate, and that's optimal because it's easy to leave because there's no penalty cost because you're at maturity. You're essentially done your term. You're a free agent to move on. And so considering your options is another reason at maturity, is for the same reason as what I just mentioned. Like you can make these changes now without triggering penalties or any breakage costs because you're at maturity and you are a free agent to make some changes. So we're going to touch on some changes here that, again, it's an optimal time to consider at time of maturity. And even sticking with your lender, even if you stayed with your lender and you want to do some of these changes we're going to touch on midterm, you would still pay a penalty. So let's touch on this. I'll start with kind of the first one, and this has been a hot topic lately: extending your amortization. You might have, let's say, 20 years left in your mortgage, and you're potentially seeing the the light at the end of the tunnel of paying off the mortgage in full. We've talked about this in previous episodes, so we won't go too deep on this, but, paying your mortgage off may not necessarily be the best play for a lot of people where they are in their life. So extending the amortization, especially at times like this when rates are so high, could be very, very beneficial. As an example, if you have 20 years left and you could extend that to, let's say, 30 years, that could really bring the payment down significantly, and it could really weather the storm from a perspective of rates being so high. And we've seen a lot of clients taking, maybe a short 1 or 2 year term and extending the amortization and looking at just doing this all over again in 1 or 2 years when rates are a lot lower. So, being able to not have the payment shock of the new rate by bringing the mortgage or spreading the mortgage out over more years, ultimately bringing the payment down, and then reevaluating this in 1 or 2 years. So, trying to take the sticker shock away from like, oh my God, I just added 10 years to my mortgage. It's like, no, this is just really just a, patching a hole in the ship to ultimately get to, a better plan in 1 or 2 years.
Yeah, I think a big piece on that amortization as well is like knowing your situation. Just had this conversation a couple weeks ago, and like these people are legit going to sell this property in the next year. They know they're going to sell it. And extending their amortization helps them a lot financially. So it's like, as much as everyone wants to pay their mortgage down quick and no one wants to extend, it's going to make very little difference for them. And they know that they're going to be selling and buying again and restarting at 30 years anyway. So you got to think about your personal situation in and amongst that too. Like, again, it's very rare that people make it to the end of their term, let alone like paying off a mortgage is a lifelong piece for most people, right?
Yeah, I think you just made a good point, right? Like, what's your you're coming up for renewal? Like, part of the evaluation process for yourself, it's not just numbers on what they're offering you. It's like, what's your life plan, right? If you're a young couple and you're looking to upgrade, but you're not quite there, going long term with your mortgage term is probably not the best idea. If you need something that's going to offer you a little bit more flexibility, you need to explore either a variable rate option or a shorter term. Right? If this is, oh my gosh, we've got baby number 3 on the way, we're about to go on maternity leave, we love this home, we're not going anywhere, and the payments are comfortable for you, then maybe a longer term does suit your needs better, right? Like, as much as it's, term product, you really need to assess your life situation and what goals you're looking to achieve, right? Something we've been seeing too from a lot of banks is they're not offering all the terms, right? They're just offering you a 5-year term, right? And that's the most common mortgage taken in Canada. It's the most, anytime we get a call from a borrower, most of the time they're asking about a 5-year rate. But don't be afraid to push back, right? They should be offering you all terms available. And that's really your time. We've said it a few times, you're a free agent at that point, right? So, you don't need to necessarily take the first offer, go long term. Look at your life plan, and then, that'll help you assess which product you need to take or what is best for you, despite what the numbers or rates show. Because that's a conversation we have all the time, right? Like, it's easy to hear from someone like us, like, oh, it's not just about the rate, but, in a lot of cases it is, especially if you are planning a major life change and you just so happen to be coming up for renewal.
Good point. We talked about changing lenders, of course, and the options in shopping at that point. One of the things we see quite frequently is drawing out equity, and we've hit this one hard in many episodes of like all the reasons why you would want to pull out equity. So we're not going to go too far down that rabbit hole. But if there's any reason why you would maybe consider pulling out equity, renovations and debt consolidation are probably the top 2 reasons. If there's any reason or reasonability that might be needed in the next, say, now to 1 or 2 years, highly consider doing it now. Again, back to the fact that there are no penalties, there are no costs on breaking the mortgage. Do it now. It is highly advisable. And if you don't, ultimately, let's say, renovations are in the, in the big picture and from a goal perspective. But it is 1 or 2 years out. Consider adding a home equity line of credit. Depending on what lender you're with, we could add a home equity line of credit, so we're not incurring interest costs now, but the funds are there and readily available for you down the road. So drawing out equity is a big one. Definitely would highly consider looking at your options when it comes to that.
I was just going to hit on that, Dean. I think it's a great point. If I had a mortgage maturing and I'm staying put with my existing lender, if I'm going somewhere else, I'm looking for a line of credit and I'm trying to grab the biggest possible line of credit I can possibly qualify for. simply because it's a great fail safe to have. There's new secured line of credit regulations that are coming up sooner that are going to make it a little bit more difficult to qualify for one. And it's a great tool to have. And this is your opportunity to try and add it to your mortgage.
Yeah, my big piece on that is always like, plus if you're going through the process, like we talked about how there's a bit of work involved for the borrowers, for the broker, like there's a bit of a process. If you're going through all that, like get a HELOC. Because if you find out that you need a HELOC in 2 years from now, you got to go through that same process again. And like Tyler mentioned, you might not even get it at that point if regulations changed. Anyways, just a totally different piece. But if you're going through the process, if you qualify, there's no harm in getting one. It's not going to cost you any extra money. The only people that probably shouldn't get one is if you have a legit spending problem, right? And you're going to go shopping or what have you. Just a consideration there. But yeah, and I think just like overall, just to kind of probably finish off on that topic, like just the strategy side is so important. And you might go through this whole process with us or your broker, whoever it is. You might go through this whole process and you're like, you know what? I don't need to change anything. Like I'm actually good and I'm good to maintain my amortization and I'm good to keep the same mortgage amount. And like, I'm just going to renew, right? But you won't really know until you go through that process and you have someone asking you the right questions, right? Because there's a lot of things that you don't really think about. I mean, drawing equity, right? Dean touched on like paying off debt, renovations, like there's a lot of people that have made a ton of money on real estate, especially where we live, right? Like buying a rental property. These are conversations that we have with all of our clients who are coming up for renewal because people just aren't thinking about it, right? And people think that it's unrealistic, but a lot of people can qualify to buy a rental. And a lot of people, if you've owned a property in Greater Vancouver, Fraser Valley for 5 years, you have equity, right? If you can tap into it, this can be a massive tool for, just overall wealth planning, but at the same time, like retirement planning. Right, it can be massive.
Yeah, I mean, it's an exciting time for a lot of couples and families to have, to be able to have conversations like that and to be able to put goals in place and talk about potential goals like buying another property. To Derek's point, like that's really where you see the wealth creation really get maximized from a perspective of just being able to get more in bed when it comes to the local real estate market, which again, we've talked about strategies and wealth creation there many times, and we'll probably save that one for future episodes. But it's an awesome point and something, again, it's an exciting time to be able to just have those goal planning discussions. So I think a lot of things that are on people's mind is what are the costs to expect from this, and depending on when this is coming up, I'll kind of start with the first one. Would be penalties. There could be a penalty if you're looking at early renewing, maybe before that 6 month mark or really any time prior to 3 months, there could potentially be some penalty costs. So factoring that into your calculations is going to just come down to strategy, planning, making sure, we would never advise somebody to early renew and pay any sort of penalty unless it was going to save them substantially in other areas, other parts of the strategy, like paying off higher interest debt or what have you. Whenever we've ever recommended somebody to pay off their mortgage or renew early and incur, say, maybe a 3 month interest penalty, it's always come with far significant more savings. So it was a no-brainer to do it in those cases. And those penalty costs are usually rolled into the mortgage, so it's not an out-of-pocket cost. But that could be a cost for you. But typically, if you do wait right till maturity and you do decide to make a change, and one of the changes we've discussed previously, there should be no cost from a penalty perspective.
Yeah, of course, all great and accurate points. And just, the other couple costs you could consider too, right? Like if you are moving to a new institution, leaving your existing bank, sometimes even adding more mortgage money to your bank, depending how the mortgage is structured on the title of your property. Usually you're going to incur a legal fee. So hiring a lawyer or notary again. Sometimes those costs going to be anywhere from, on the cheaper end, $800 to $900, on the higher end, $1,800. A fun fact, and maybe not really well known, is that, there's a lot of lenders out there, if you're switching from one institution to another, that'll actually cover those costs for you in an effort to win your business. So that can, essentially be a free switching costs. And something we see right now a ton in our marketplace, and usually this time of year, is cashback promotions, right? So banks are very hungry for business and they want your business. And sometimes, we're seeing banks throwing $3,000-$4,000 at clients, depending on the size of their mortgage, to move to their institution. So But again, if you're just renewing at your existing lender, you're not adding any funds and you're just taking a new rate, there'll be no, new setup fees, new legal fees. Of course, if we are moving you, sometimes there's an appraisal that's associated, an appraisal cost that could be incurred to move that. That would just all be part of the approval process.
Yeah, I don't have much more to add. I mean, that the costs are pretty straightforward, like we talked about, right? Like if you're renewing on maturity, there's no penalties. There's potentially legals or an appraisal cost if you're doing more of like a refinance than a straight renewal or transfer to a different lender. Only other piece I just wanted to touch on, which we actually didn't bring up in regards to timelines, is this isn't a blanket statement again, but with most lenders, we can lock in an interest rate 120 days prior to your maturity date. So if you're 6 months prior, like we said, it's never too early, but if you're like 6 months prior to your maturity, like that is a key time to get in touch, because it gives us a window of a month to 2 months to build everything. Take your time. There's no stress. We have a detailed conversation, and as soon as we hit that 120-day marker, we can actually go get your approval, lock in your rate. And don't get me wrong, like you're not committed to that rate. If rates go down, you get the benefit of that before maturity. But if rates go up, at least you've locked something in and you have everything aligned, done, dealt with, and it just sits, you got 120 days, you got 4 months, and it's just a very casual, easy process. And then your last step is, like Tyler mentioned, typically seeing a lawyer or notary a couple days before renewal. Other piece just to bring up there, a lot of people think that they have to call their bank and let them know, like, hey, I'm switching, I'm going to be paying off my mortgage. You don't have to communicate with them at all. That's all done through the lawyer. The lawyer takes the mortgage money from the new institution. They pay off your current mortgage. They do everything internally. So you don't actually have to communicate with them at all if you are switching institutions.
So one big cost that I've seen come up, and this is maybe a potential change that we didn't touch on, but I've had clients want to add another borrower to the mortgage or to title at time of maturity, like, maybe adding on, a wife that wasn't a wife at the time that they bought it, or any sort of family member that they want to add to the mortgage, add to title. There could be a big property transfer tax bill when bringing another member onto title and onto the mortgage, just depending on how you chop that up with the lawyers and percentage of ownership or gift of equity or what have you. So something to definitely calculate with your lawyer and your accountant, but that could be a big cost and something to be aware of if you are bringing on a borrower. And rolling back a couple steps, if you want to bring on another borrower, perfect time to do it is that time of maturity. So we'll look to just kind of wrap this one up. One of the things that we just kind of want to probably close on is, it's pretty obvious to from what we talked about here, is getting a second opinion is key, and looking at a mortgage broker like ourselves, of course, we're definitely going to plug ourselves here. We take a very detailed and strategical approach to this, and I think that's just one area I definitely want to just kind of touch on and leave off on, and maybe we can kind of just toss that around, is just the benefits have probably really been embedded throughout this whole episode of just having a second opinion and working with a broker. But, maybe we can just highlight a couple pieces to end this one off.
Yeah, I guess I would just say, like, I mentioned something about market conditions earlier. Like, there is a major bank lender in our space that has been an amazing lender that was extremely busy over the last few years, that has had, liquidity issues. And what that's meant for borrowers is they're completely out, and we're not naming any names, they're completely out of the rate game. They cannot offer cheap rates when they were a market leader for years, right? So things can change that are unforeseen. And why that's important to a borrower is, get a second opinion, right? Because I can only think of how many thousands of mortgages are coming up for renewal of people at this bank that have no idea. And they just assume because this is a major big name bank that they're getting the best deal out there, when something that was, supposedly not out of their control has completely changed the pricing matrix of their mortgage offerings. So yeah, might be beating it over a head here, but talk to your broker, talk to a qualified mortgage professional early. I think the two big key takeaways for me before I sign off is just, you're never too early to start. And just always bring in a second professional if you can.
Yeah, really good points. And my piece on this is, number one, there's no cost to go through the process with a broker, right? Like, to understand your options, there's no cost. So even if you go through that and whatever they've presented to you, if it doesn't make sense, you don't need to take it. You're not committed. you don't have to proceed with whatever's been offered. Big thing to understand from a mortgage broker's perspective is we only get paid, not that this is about money and commission, but we only get paid if we can find a solution for the client that makes sense for the client, right? So we're very incentivized, obviously, to make sure that, every single client that works, and I'm just talking brokers in general, brokers are very incentivized to make sure that the clients have the best possible outcome, that it was a good process, right? Everything went smooth, because if a broker can't achieve that, they're likely not going to close that mortgage and they're not going to get paid. And that's a terrible business model. So at the end of the day, like if you're working with a good broker, everyone's rowing the same boat, right? And like I said, just back to the initial piece, there's no cost for that service, right? So to me, it's a no-brainer. You got to put in maybe an hour of work getting an application and documents done to look at options.
Yeah, great points. Let's end it there. I think that was a pretty impactful episode, especially for anyone that's has a mortgage coming up for renewal in the next 24 months. Some really good info there. If you have any questions, of course, never hesitate to reach out to our team. And if you enjoyed this episode, we really do appreciate your feedback. So whatever you can do to leave us a review, hit the subscribe button if you're not already subscribed to our podcast. Whether you're listening on YouTube, Spotify, or Apple, whatever it is, make sure to continue to subscribe and support us in that way. And if you think this is of value to you, we would really appreciate if you shared this podcast and this content to anyone that you think would benefit from it. So yeah, just want to thank everyone for tuning in, and on to the next one.